my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. Here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bearish black crow and bearish black Marobozo yesterday. The follow-on lower to the previous session's large bearish engulfing pattern. Key levels that the market went through on its way down were obviously the long moving average, currently at 119.97, and the recent 50% Fibonacci line at 119.75. Prices halted their fall upon approach to the continuation trend line from the old December 2019 to May 2020 lower diamond trend line. I don't know if any of you remember that, but that was there. That's currently at 118.21. The market did something similar to this back in late March at a similar distance from the same trend line. All this move lower is ultimately a follow-on from last Friday's strong key reversal down, which I'd previously mentioned. So far today, an unsurprising pullback up right now, not so much due to nearby Fibonacci levels at 118.97 and 118.87, but I suspect more to do with a bit of end-of-week profit taking. Cable, aka sterling against the US dollar. A fifth bearish black crow yesterday and continued follow-on lower from the pair of consecutive key reversals down earlier this week. The ones I have named rare compound key reversals down. Anyway, yesterday was a seminal day as the market punched down through and closed below for the first time the lower time, currently 144.45, of the special June to September 2020 bullish shift pitch fork. Now please remember, this pitch fork has given the bullish angle of attack of this market since September of last year. Hence a very, very significant day. To add to this, another significant event. We also had a close below the medium moving average, currently at 139.39. Now, this would normally be seen as an important move on its own, though it pales in comparison to the close below the lower time somewhat. The only thing I'd add is this is something I've been harping on about for months now. The medium moving average has partnered with the lower time for months and months. So a close below this is a double blow for the bulls out there. The next supports are the May 2020 today uptrend, currently at 137.26, and the lows of the double bottom from March to April in the 136.65 area. This also opens the way for a possible very large Adam and Eve type double top formed over this year. Now, more on this later. So far today, a continued move lower, utilizing the medium moving average as a cap, though so far it is cautious move lower. There is some immediate support in the 138 even area. Euro sterling. A second bearish black crow yesterday in an attempt to break down and out of the recent possible roof or half diamond pattern. The market made it all the way down to breach the extension of the flat trend line from the March-based descending triangle, that's at 85.45. However, it did not close below this trend line, instead closing just over it in the 85.5 level. We nevertheless still have the possible target X as a downside target for this roof stroke half diamond pattern in the 85.25 area. I've not placed an upside target as yet, as the overhead downtrend, currently at 86.27, and its partner, the declining medium moving average, currently at 86.32, are not currently under threat, and you'd need clear closes over them to make it so. So far today, a reactionary profit-taking Friday pullback up, but not really that high. Just enough to make today, well, it looked like a possible bullish engulfing pattern, but maybe a possible double. The flatlining short moving average, currently 85.96, is just above right now. US dollar against the Indian rupee. A gapping higher, bullish opening long white Marobozo yesterday. Gapping over the long moving average, currently at 73.46, and punching up and closing over the following. The 50% Fibonacci line of September 2019 to April 2020 move at 73.68. The 50% Fibonacci line of the 2020 move at 73.84, and halting finally at the 50% Fibonacci line of the February to April 2020 move at 74.26. It is at this point that I would like to remind you, dear viewers and listeners, that I mentioned 2 weeks ago and every subsequent day since that a pullback up from the big fall between April and May could see a move as high as 74.40 area and still keep the bearish incentive. I did point out there's a lot in the way between there and here, but please note the 74.40 area is not a target. No, it's a limit to the move higher if it wishes to still keep the bearish incentive. So it's not like you haven't been warned. So far today, a reactionary move down, as it seems the 50% Fibonacci line at 74.26 may have been one too many Fibonacci levels to digest, and looking like a bearish dark cloud cover pattern at the moment. We're pushing down towards a short medium moving average, also the 50% Fibonacci line of the 2020 move at the moment. US dollar against the Brazilian real. A combined bearish engulfing pattern and bearish closing black Mariposa yesterday. The former was easy enough, as the previous session was an indecisive spinning top, though the latter actually was interesting, as it was the lowest close since June last year. This can be taken as further evidence that the recent build-up from last week's daily key reversal up for a move higher has not only stalled, but likely evaporated. This assists with the pressure somewhat on target X in the 482.80 area. This is a very provisional and somewhat very preliminary target for the whole mid-April to date action, being a possible bearish halfway hesitation pattern. It also opens a way to look at the action of last week up till now as potential for a possible bear flag action, though something this market has recently fallen in love with. A potential target X1 for such a pattern will be in the 475.5 area. Overhead? Well, we're in fairly free territory with only the declining short moving average, currently at 510.15, plus congestion at 500.99, 505.75 and 510.87, and then lesser Fibonacci levels at 520.27 and 525.67, though we could have some early May base congestion between 521 and 3/4 and 523 and 3/4. Just watch out for any Friday position squaring pushing prices higher. US dollar against the Mexican peso. A long-tongued, indecisive doji cross yesterday that tried to test up to the recent 50% Fibonacci line at 20.5849, but found it a little too much. Yet still confident enough to make a second consecutive close over the long moving average, currently 20.38 even, if only just. This action may be, just maybe, a halt, however temporary, to the very recent run-up prompted by last Friday's key reversal up. It also brings to mind whether the action since October last year to date may be, just maybe, a very large even eve type double bottom. Below the long moving average we have further support from the flatlining medium moving average, currently at 20.2260, whilst overhead we have lesser Fibonacci levels at 20.6062, 20.8316 and 20.9039. So far today, well, the market is resting upon the long moving average with a short spike higher, but looking very much like an indecisive spinning top right now. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.